Sometimes you may have to file your tax return for less than 12 months. That is short period. So short period is less than 12 months. So you make a tax return for less than 12 months. I'm discussing here two circumstances when you may have a short period tax return. Okay, let's read. First, a return is made for a short period resulting from a change of annual accounting period. You are changing your annual accounting period. Because you are changing your annual accounting period, there is a short period. You have to make a return for a short period. I give you an example. For example, you are a calendar year taxpayer. So you're filing your tax return for a tax year that ends on December 31st. So you file your year 20 tax return. So your tax year is from January 1, 2020, ends on December 31st, 2020. Due date to file return. Fine. Now you change your tax year. You change from calendar year to fiscal year. And you know, fiscal year is a 12-month period that ends on any day. That is the last day of the month other than 31st of December. So your fiscal year is the last day of any month other than December. So you change your annual accounting period from calendar year to fiscal year. Let's say you want your tax year to be September 1, 2021. This should end on August 31st, 2022. You are changing your tax year from calendar year to fiscal year. In this case, you will file your tax return by December 15, 2022. So you will compute your tax from September 1, 2021 to August 31st, 2022 fiscal year and file tax return by December 15, 2022. Now, what about the period in between, that is starting from January 1, 2021, ending on August 31st, 2021, period in between? For this period, you compute your taxable income, compute your tax, and file a tax return. This is short period. And the tax return you file for this short period is short period tax return. And you file tax return for this period by December 15, 2021. That is 15th day of the fourth month after the close of your tax year. Your tax year is closing on August 31st, 2021. This is your calendar year, annual accounting period. This is your fiscal year. All right. Any questions? So a short period may result from a change of annual accounting period. It may also result because the taxpayer is not in existence for the entire taxable year. If the taxpayer is not in existence for the entire taxable year, you may have a short period tax return. This may happen in case of a birth or a death of a taxpayer. Let's take an example. A child is born on June 15, 2021. Following a calendar year, so tax year ends on December 31st, 2021, but tax year is starting on June 15, 2021. This is a short period, and tax return for this period, June 15, 2021 to December 31st, 2021 is a short period tax return, and the due date is April 15th, 2022. That is 15th day of the fourth month after the close of the tax year. Let's take an example of death. So a calendar year tax year who dies during the year, his tax year starts on January 1, 2021, but ends on the date of death. Let's say he dies on August 16, 2021. Now, in this case, although the taxpayer dies on August 16, 2021, he has a short period tax year, but still, his return will still fall due on April 15, 2022. Although he has a short period tax year, his tax year is from January 1, 2021 to August 16, 2021, but still, return due date is April 15, 2022. All right, students, I hope this was helpful. We'll connect again. Take care.